Picture this. It's a Tuesday morning. You're sitting at your kitchen table, sipping your coffee and scrolling through your phone when you stumble across a headline that makes you stop mid-sip. The IRS owes you money. Not in some far-off, theoretical way. We're talking about a real, actual refund. Money that's already yours, sitting in a government account with your name on it. And you have until July 10th to claim it before it's gone forever. Sound too good to be true? I thought so too at first. But there's a court ruling from 2024 called Kwong versus United States that quietly opened up a window most Americans have no idea exists. And inside that window are millions of dollars in penalty refunds the IRS is legally required to give back, but only if you ask before the deadline. Most people are going to miss this. Not because they don't qualify, but because nobody told them. My name is Jenna, and today I'm going to walk you through exactly what this is, who qualifies, and what you need to do in the next few weeks before this money disappears for good. And I spend way too much time obsessing over financial data, government tax code, and the strange little loopholes that quietly transfer wealth from people who don't pay attention to people who do. If you've ever felt like the entire tax system is rigged against you and that the IRS only ever takes and never gives back, make sure to hit that subscribe button and give this video a thumbs up. Because today might be one of the very few times the math actually works in your favor, but only if you act in time. Now, before we get into who actually qualifies for this money, let me back up and explain how we even got here. Because the story behind this refund is genuinely wild, and once you understand it, you'll see why the IRS is being forced to hand back money it never should have collected in the first place. Rewind to 2020. The world is shutting down. Businesses are closing overnight. People are losing their jobs by the millions. The IRS itself is sending workers home and basically grinding to a halt. Mail is sitting in trailers and parking lots for months. Tax returns are getting lost. Refunds are getting delayed. The entire tax system is a chaotic mess. And in the middle of all this, regular Americans are doing their best to file their taxes on time. But because of all the chaos, a lot of people end up filing late, paying late, or making mistakes they wouldn't have made under normal circumstances. And what does the IRS do? Exactly what they always do. They slap on penalties and interest. Late filing penalty. Late payment penalty. Failure to deposit penalty. The whole menu. So millions of taxpayers got hit with penalties during the COVID years for situations that were completely outside their control. Penalties that, under any reasonable reading of the law, never should have been assessed in the first place. But the IRS collected the money anyway. And most people just paid it, because what else are you going to do? You can't exactly argue with the IRS over a few $100. Fast forward to 2024. A taxpayer named Kwong takes the IRS to court over exactly this situation. And the court rules in his favor. The decision establishes that taxpayers who paid penalties and interest during the COVID disaster period have the right to file for a refund. But here's the catch. There's a strict statute of limitations. You have to file the right form in the right window before the deadline closes. And that deadline is July 10th, 2026. So, who actually qualifies for this? Let me walk you through it because the criteria are broader than most people realize. And I'm going to be honest, when I first started researching this, I was shocked at how many regular taxpayers fall into this bucket without even knowing it. First, did you file a federal tax return for tax years 2019, 2020, or 2021? If yes, keep listening. Second, did you get hit with any kind of penalty during those years? Late filing penalty, late payment penalty, failure to deposit, or interest charges related to any of those? If yes, you might be sitting on a refund right now. Third question, and this is the big one. Did your situation during 2020 or 2021 involve anything COVID-related? And the IRS is interpreting this incredibly broadly. We're talking about job loss, reduced income, illness, caring for a family member who got sick, a business that had to close or pivot, mail delays that caused you to file late, even the IRS's own backlog that prevented them from processing your return on time. Basically, if your life was disrupted in any way during the pandemic, and almost everyone's was, you have a legitimate argument that the penalties assessed against you should never have been collected. And the Kwong ruling is what gives you the legal standing to ask for that money back. Now, you might be thinking, well, this is probably only worth like $50. Why bother?
And I get it.
But let me show you what we're actually talking about. The average penalty assessed during the COVID years was somewhere between $200 and $1,200 per taxpayer per year. Some people got hit with multiple penalties across multiple years. So if you got penalized in 2020 and 2021, plus interest, plus a failure to deposit charge, you could easily be looking at a refund of $1,500 to $3,000. And for self-employed people, freelancers, gig workers, small business owners, the numbers get bigger. A lot bigger. I've seen estimates that some self-employed taxpayers could be due refunds of $5,000 or more, depending on how their estimated quarterly payments got tangled up during the pandemic. Here's something most people don't realize. The IRS isn't going to call you. They're not going to send you a letter saying, "Hey, we owe you money. Please come collect it." That's just not how the system works. The burden is entirely on you, the taxpayer, to file the right paperwork and make the claim. If you don't ask, you don't get. Okay, so let's get into the actual mechanics. How do you do this? What form do you need? What information do you need to gather? Let me walk you through it step by step, the way I'd walk a friend through it over coffee. The form you need is called Form 843, Claim for Refund and Request for Abatement. That's the magic piece of paper. It's a one-page form, plus instructions, and you can download it for free directly from the IRS website. Don't pay some random service $200 to file this for you. The form itself is genuinely not that complicated. Step 1. Pull your IRS account transcripts. You can do this online for free at IRS.gov by setting up an account through their identity verification system. Once you're in, you can see exactly which penalties were assessed against you, how much, and for what tax years. This is the most important step because it tells you exactly how much money you're actually trying to claim back. Don't skip this. Step 2. Fill out Form 843. The form asks you for basic stuff. Your name, your social security number, the tax year in question, the type of penalty you're trying to get refunded, and the dollar amount. Easy enough so far. Step 3, and this is where most people get tripped up. Box 7 of the form asks for the reason you're requesting the refund. This is where you write your explanation. And under the Kwong ruling, the magic words are something along the lines of requesting penalty abatement and refund pursuant to the COVID-19 disaster declaration and the Kwong versus United States ruling. Then you briefly describe how COVID specifically affected your ability to file or pay on time. Were you sick? Did you lose your job? Did your business close? Did you have to take care of a family member? Did the post office delay your mail? Did the IRS itself lose your return? Whatever your specific situation was, write it down clearly and concisely. 2 or 3 sentences is plenty. You don't need to write a novel. The IRS just needs a clear, plausible reason that ties your penalty to the COVID disaster period. Step 4. Sign it, date it, and mail it to the correct IRS service center. The address depends on which state you live in, and it's listed in the Form 843 instructions. Use certified mail with tracking. I cannot stress this enough. Use certified mail. You want a paper trail proving exactly when the IRS received your form, because the deadline is brutal and there are no extensions. Step 5. Wait. The IRS typically takes 8 to 12 weeks to process Form 843 claims. Sometimes longer. You might get a letter asking for additional information. You might get a letter approving your refund. You might get a letter denying it, in which case you have the right to appeal. But the key thing is that as long as your form was postmarked by July 10, 2026, your claim is locked in. Even if it takes them 6 months to actually process it, the deadline doesn't apply to processing time. It only applies to filing time. Now, let me save you some pain by walking you through the mistakes I keep seeing people make with this. Because as straightforward as the form is, there are a few traps that can either get your claim denied or, worse, cause you to miss the deadline entirely. Mistake number 1. Waiting until July to file. I know, July 10th feels far away. It's not. The IRS is going to be flooded with these claims as the deadline approaches. The post office gets bogged down. Mail delays happen. People mistakenly assume that as long as they mail it on July 10th, they're fine. Some of them will be wrong, and they'll lose their refund forever because of a 24-hour postmark issue. Don't be that person. File this in the next 2 weeks if at all possible. Mistake number 2. Filing without pulling your transcripts first. If you guess at the penalty amount and you're wrong, the IRS will reject your claim and make you start over. By the time they reject you, the deadline might have passed. Always pull your transcripts first so you know the exact dollar amount you're claiming. Mistake number 3. Writing too much in box 7. I know this sounds counterintuitive, but the IRS agents reviewing these forms have to process hundreds of them. If you write a 3-page emotional essay about how hard 2020 was, you're going to lose them. Keep it tight. 3 sentences max. Cite the Kwong ruling, cite the COVID disaster declaration, briefly state your specific hardship. Done. Mistake number 4. Not using certified mail. I already mentioned this, but it's worth repeating. If the IRS claims they never received your form and you have no proof of delivery, you have no case. A $5 certified mail stamp is the cheapest insurance policy you'll ever buy. Mistake number 5. Falling for scams. This is a big one. The moment a deadline like this gets publicized, scammers come out of the woodwork. You're going to get phone calls, texts, and emails from people claiming to be from the IRS, offering to file the form for you, asking for upfront fees, asking for your social security number. Ignore all of it. The IRS does not call you. The IRS does not text you. The IRS does not email you. If you want help, hire a licensed CPA or enrolled agent. Otherwise, do it yourself for free. Okay, let's zoom out for a second. Because the deeper lesson here isn't really about Form 843. It's about something much bigger. And once you see it, you can't unsee it. Most people think of taxes as a one-way street. Money goes from you to the government, and that's the end of the story. You file your return, you pay what you owe, and you forget about it. But that's not actually how the tax code works. The tax code is a living document with thousands of pages of rules, exceptions, deductions, credits, and refund opportunities. And almost all of those opportunities require you, the taxpayer, to actively claim them. Here's something that might surprise you. The IRS estimates that billions of dollars in refunds go unclaimed every single year. Not because people don't qualify, but because they don't know they qualify, or they don't file the right paperwork in the right window. That money just sits in government accounts forever. It's a quiet, invisible transfer of wealth from regular taxpayers to the federal treasury, and it happens because most people don't realize the system is set up this way. Wealthy people, on the other hand, know exactly how this works. They have CPAs and tax attorneys whose entire job is to find every single dollar the government legally owes them and claim it. They don't leave money on the table. They don't assume the IRS will reach out. They treat the tax code like a treasure map, and they're constantly looking for the next opportunity. And the gap between people who do this and people who don't compounds over time. Imagine claiming an extra $2,000 in tax refunds every single year for 30 years and investing that money in an index fund earning 8% annually. Do you know what that turns into? From money that was already yours. Money that the IRS would have happily kept if you'd never asked for it. This is what people mean when they say the rich don't pay taxes. It's not that they're breaking the law. It's that they're using every legal tool the tax code provides to minimize what they pay and maximize what they reclaim. And the same tools are available to you. You just have to know they exist and be willing to use them. The Kwong refund opportunity is one of the cleanest examples of this principle I've seen in a long time. The court literally said, the IRS owes this money back. The government has admitted it. The form exists. The deadline is published. And yet most Americans are going to miss it entirely because nobody's going to chase them down to give them their own money. Let me paint you a picture of what claiming this refund actually feels like, because it's not just about the dollar amount. It's about something more important than that. It feels like opening your mail in late summer and seeing an envelope from the U.S. Treasury, and instead of dread, you feel anticipation. It feels like depositing a check that you didn't expect to get and watching your savings account quietly tick up. It feels like the small, satisfying realization that you played the game correctly while everyone else was on autopilot. It feels like sending a screenshot to your friends or your spouse and saying, hey, you should check if you qualify for this too. It feels like becoming the person in your family who knows about this stuff. The one your siblings call when they have a tax question. The one who finds the loopholes everyone else misses. It feels like a small but real shift in how you see your relationship with the government, with money, and with the entire financial system. You stop thinking of yourself as someone things happen to, and you start thinking of yourself as someone who pays attention. And that mindset shift, honestly, is worth more than the refund itself. Because once you start looking for these opportunities, you find them everywhere. So, there you have it. The Kwong refund isn't some obscure loophole that only tax attorneys can access. It's a one-page form, a few sentences of explanation, a trip to the post office with certified mail. And in exchange for maybe an hour of your time, you might walk away with a refund of $500, $1,500, or several $1,000s that the IRS is legally required to give back. But the window slams shut on July 10, 2026. After that, this opportunity is gone forever. No appeals. No extensions. No do-overs. So if you've been putting this off, or if you weren't even aware this existed until you watched this video, today's the day you do something about it. Here's exactly what I want you to do this week. Step 1. Pull your IRS account transcripts at IRS.gov. Step 2. Look for any penalties or interest assessed during 2019, 2020, or 2021. Step 3. Download Form 843. Step 4. Fill it out. Cite the Kwong ruling and the COVID disaster declaration, and mail it certified to the right service center. That's it. For steps. One afternoon of your time. Potentially thousands of dollars back in your pocket. And listen, even if it turns out you only qualify for a $200 refund, that's still $200. That's a utility bill. That's a week of groceries. That's a small but real contribution to your emergency fund. Don't let that money stay with the IRS just because filing felt inconvenient. If this video helped you, hit the subscribe button so you don't miss the next time the financial system quietly opens a window for regular people to grab back some of what they're owed. Because trust me, this won't be the last one. There's a whole world of these opportunities out there, and from now on, we're going to find them together. Your future self is going to thank you for the decision you make today. Don't wait until July.